Let's welcome then Chakri Lokapriya, who's joining in on the show as well. Chakri, thanks so much for taking time out. I wonder if you track VST Industries, only owing to the news with Mr. R.K. Damani now upping his stake, of course, for the long haul. How you've read into this news and whether you track the company at all?
Good morning and Happy New Year. No, this is a sector which we don't invest in much, and so I wouldn't really be able to add much value on this.
I'm sure you'd be able to add value and give us a sense as to what the outlook is when it comes to PSUs as a whole, because a lot of top market experts we've been interacting with seem to be of the view that the year ahead as well could look fairly promising. Your sense after the heady run-up?
Indeed, as we go into 2024, and I think PSUs are still very well placed. Some of the PSUs, of course, have run up very sharply, but their valuations are still not demanding. Now, why have they run up? If you take PSU financials, basically their balance sheets are very strong, NPAs are very low, credit cycle for corporate government capex has picked up, will continue to do well. So when you have three main ingredients on a strong balance sheet and a low, then you have upside on which is pretty much intact. The second, in terms of whether the industrial space, again, whether it is the power sector or the infrastructure space, again, there is this multi-year shift to green energy, shift to infrastructure spending, which again goes to some of the PSUs get the first orders, whether it is the NTPC, NLC, companies like that, BHEL will continue to win. So I think there are still enough money, there's enough money to be made in the industrials and the financial space within the PSUs.
Citibank is calling HDFC Bank as their big pick, followed by Indus Tower and Cipla. So I'll repeat the names again. HDFC Bank, Cipla and Devyani and Indus Tower. Do you agree with them, Chakri?
Yeah, no, HDFC Bank, clearly, yes, the company has underperformed. There's some merger integration issues, which has led to an increased cost of capital for the business, for the bank, for the new bank. That's likely to kind of even out in maybe another 2-3 quarters. The valuation is about 3.5 times book. Loan growth for this combined entity has to pick up, which it will as interest rates start moving down. That is, when RBI and when the US and RBI hit a peak and thereafter start cutting rates, HDFC will start benefiting. At that point, you will have a rupee appreciation, hopefully, that will bring in FII inflows, which again goes towards the largest weights, and HDFC Bank benefits. Now, in terms of Devyani again, the QSR space is finding it very tough in terms of margins. And that's unlikely to change anytime soon. Consumer has been sluggish, will likely to be so for the next couple of quarters. So I think that has a space, and valuations are still quite high for Devyani. Now, if you look at for Cipla again, I think it's the companies like Lupin are better placed than Cipla because they have new product approvals, margin uptakes, a lot of business levers in place.
All right, there you have it. That's the view coming in on some of those stocks. But let's move on then to the brokerage radar. Fresh brokerage notes coming in this morning. Federal Bank and M&M Finance on the brokerage radar. Let's get in Gaurav, who joins in with the details of those brokerage notes. Gaurav?
Yes. So first we have got some business updates from banks, which is Federal Bank and Mahindra and Manad Finance. So let's first talk about the Federal Bank. So according to the business updates for Q3 FY24, they believe that the customer deposits have grown almost by 18% YOY. Total deposits have also grown in the same line by 19%, and the gross advantages have also increased by 18%. If you talk about the CASA, it has grown by 6%. And on the back of this update, we have some brokerage notes. So first we have Nomura, which has maintained its buy rating and a target price of 190 rupees. They believe that NIMs are likely to be stabilized in the coming time, and they also believe that asset quality is also going to remain in the same range. But if you look at the advances and the deposit growth, it was actually moderate, is according to what the brokerages are saying. We also have Citibank, which has again maintained its buy rating, but the target price of 170 rupees. They believe that we may see some kind of cost efficiencies to stabilize from here on, and the credit cost is also going to provide some support to the bank from here on. And they also believe that NIMS trajectory is something to be a key watchable for the stock. We also have Morgan Stanley on the Federal Bank, which has maintained its equal weight and a target price of 165 rupees, because they also believe that advances growth and deposit growth was somewhere in line and tad in below what the street was expecting. Let's also talk about the Mahindra and Mahindra finances, where the overall disbursements were actually a little weak. They grew only by 7%. Collection efficiency, although, has improved to 98% versus what it was at 94% in the last year, and last month. And the stage 3 assets have also improved for the bank, and they are likely to be at 4% according to the bank's updates. And on back of this, now brokerages see that Citibank believes that they have maintained the buy rating and the target price of 350 rupees. They believe that disbursement should support the 27% growth in AUM YOY.
Chakri, if we frankly look at HDFC Bank and ICICI Bank, okay, 2023 was not such a great year, but it was a great year for IDFC Bank. It was a great year for IndusInd Bank. It was a decent year for Axis Bank suddenly in the last one quarter. Which, to your mind, from the small and the mid-cap banking space could be the standout mover?
I think, IndusInd Bank, while it's done very, very well, that's a bank which will continue to, that can do well because as the corporate cycle picks up. Second is, ICICI Bank, of course, will do well because it has a very healthy mix of both corporate and retail. For all these banks, whether PSU, private, large or small, the interest rate cycle peaking out and then coming down, corporate capex picking up is a common theme which will benefit all these banks. And second, it's actually very interesting to note that, in fact, the large companies across board, industrial space, actually did not do much capex in last year. The capex was only about 5-6%. The capex mainly came from the mid-cap space, where the capex was about 15-16%. Now, some of these banks, like the Federal Bank or the smaller names, mid-cap PSU or private banks, they lent to the mid-cap companies. And therefore, their loan growth was stronger and therefore will continue to be stronger. Now, the large cap companies will hopefully join the party as interest rate peaks, and that will benefit the big cap banks.
All right, stay with us, Chakri. And as we head into another earnings season, let's take a look at some of the key EPS changes that we've seen ahead of Q3. We've got Sharad joining in with those details. Sharad?
Well, yes, in our analysis, we have taken the stocks tracked by at least 10 analysts, and the universe comes to almost 309 stocks. Almost, you can see a 3 to 4% upgrade coming in when it comes to the healthcare, materials and the real estate segment, while it has been flattish when it comes to the energy segment. Now, importantly, we'll be looking at how the EPS changes have come up for the 12-month forward basis, and this is coming right after the earnings of Q2 till date, and you see the majority of the upgrades coming in, almost 87% of them. However, downgrades are on the lesser side, coming at almost 7-odd%. But the question remains is, which are the stocks which have seen a top EPS upgrades coming in? And if you look at it for the stock specific movement, we are having stocks such as Bharat Dynamics, ACC, Mankind Pharma, Mahindra Logistics and Sagar Cement. And over here, the larger upgrades are coming in, especially in the pharma name in Mankind Pharma. Also, the cement names ACC and Sagar Cement also come in this pack. Now, which are the stocks which are seeing the top EPS downgrades coming in? That is something to watch out for. And the list, of course, is having consumption names mostly. If you look at it, V-Mart Retail is there, ABFRL is there, and even restaurants brand Food Asia is there. That is where we are seeing a significant EPS downgrade coming in over the last 1.5 months, which we have seen. And surprisingly, Paytm also comes in the list with almost a 42% cut.
2% cut. Paytm. Chakri? Zomato has gone the other way, Paytm is going the other way. They both, when the fintech and the consumer tech space corrected, Paytm and Zomato, they both came down. But on the way up, there is a big divergence. Has the business model of Paytm, has that got challenged after what the Reserve Bank of India has indicated?
You're absolutely right, Nikunj. That's partly, that's hit and will continue to hit their margins of their business. The cost of capital, the cost of doing business has gone up, and being basically intermediary pass-throughs, what they keep in between as the spread has gone down will likely to remain down. That will require them to raise capital furthermore. Now, for them to do that in the current levels is actually quite challenging. On the other hand, Zomato is a more pure consumer business, which has benefited, and therefore, and Paytm will probably continue to face these woes until they have their own in-house products, which is not their underlying business model.
Just looking at Avenue Supermart, let's just bring out the last 2-year chart. In fact, I think, and the stock hasn't done a whole lot. Of course, in the last 3 odd months or so, you've seen a bit of a pickup. And the Q3 update is pretty interesting. They're saying that the sales growth rates has declined sequentially by about 17%. Revenue per square feet, they're saying, is going to continue to improve. And analysts are saying that DMart's grocery-first strategy is going to re-engineer growth, and the throughput is improved but remained below the pre-COVID-19 levels. Chakri, the business clearly seems still a bit of a struggle. What do you have to say about Avenue Supermarts now, around 4,100 levels?
I think the valuations have corrected fairly significantly. The company has, kind of suffered because of an overall weakness in the consumer, and also given that the markets that they target in the smaller cities and towns. With an interest rate cycle, again, hopefully this whole thing hinges on, if you look at yesterday's US data, where unemployment is picking up and PMI is slowing down, which is all positive for negative for the economy, positive for the interest rate cycle, and therefore an interest rate. When that cut happens, and that's important because these Avenue supermarkets operates on very low margins, and therefore their cost of capital has to come down. Interest rates, net working capital costs have to come down. So I think we have to wait for that, which is probably at least another quarter away.
Let's look at, again, something which you in a sense have mastered, identifying long-term breakouts. We've spoken about Bosch, that how Bosch is coming out of this sleepy hibernation after 7 or 8 years. Any other stocks which have potential to come out of their sleepy hibernation of 3 to 5 years? Could DMart be one of them? Naresh?
So DMart is something which looks more sideways and can continue to remain in that band for a much longer period. It had a classical top in 2021, so not expecting DMart to actually turn around in the near term.
The first part of my question, which are some of the large cap stocks which have hibernated but are now ready to go?
So I would go with a lot of names on the PSU side, something like ONGC, which has done nothing. That is one. And consumer durable as a sector is looking promising, right from Voltas to a Symphony to various names like Crompton Consumer. So consumer durable space, and then FMCG. So FMCG as a pack, if you look at Hindustan Unilever, it's gone nowhere for the last 2 years. And also for the last 4 years, it topped out around 2,500 in 2020. And since then, it's gone nowhere. You can look at a bunch of names like Marico, Dabur, etc. So I would be looking at FMCG and consumer durable space as a large cap or a mid cap names which could actually get out of hibernation.
Segment which has really come to the fore after being hugely beaten down, post the global majors gave their guidance cuts has been the chemical sector. Now, most chemical companies are now looking at diversifying. They're eyeing the EV battery value chain as well. Chakri, you think chemicals merits a relook selectively though?
I mean, you're right in your observation. The sector has not done well. The valuations are actually still have not connected that much, given that the revenue top line has slowed down quite dramatically. Many of the export-oriented names, their recovery is still a couple of quarters away. Some of the companies like Tata Chemicals, they have forayed into doing chemicals for the EV industry, so those companies will benefit. The earnings recovery is still a couple of quarters away. So against that backdrop, we were recently looking at some small company. It's a Gujarat Themis or something. Those kind of companies, they're more. I mean, I didn't want to talk much about it because it's a small company. But companies like SRF, PI Industries, their valuations have corrected only in line with the earnings fall. So I think we will still have to wait by the sidelines for the chemical companies.
Give us your top large cap idea, top mid cap idea, and a top small cap idea for 2024.
The mid cap idea is like a company Sterling Wilson. This company it's in the solar industry. They benefit from a fall in solar module prices. Reliance Industries owns about 40% of the company itself. Reliance is going to have a very big push into green energy. So some fraction of the order of their overall order book was likely to come to Sterling Wilson. It has both a domestic facing business as well as an international Africa business. Cash was an issue, which they recently did a QIP. And therefore the balance sheet is strong. So it's a structural story which, valuations on their side, business secular on their side. I think stock can do really, really well from current levels. Amongst the large cap, I think SBI and ICICI Bank, both valuations on stands, very strong balance sheets. I think and in the small cap is we're talking about this one very small company called Gujarat Themis. It's a chemical company, since we talked about chemicals earlier. It had fallen off the cliff. Now valuations are on their side, and they're beginning to get some export orders and also orders in the space.
Chakri, good to have you on the show. We'll let you go on that note. Good speaking with you as always.